G'day, Divergence traders. How y'all doing today? This is Jason here from Trading Divergence 101. Today is August the 4th, I think. Yes, August the 4th. And it was non-farm payroll. And here's your spike up and then down and then your spike back up. And up we go. So where's the divergence trades for today? Well, I think you see the first one because I had it already marked up. So if you would have bought long there, right there, your stop would be 70 points or so. Did we go up 70 points? We did. We went up 108 points. Then what happened up here? We had a high, a retracement, and a higher high. Okay? And down here, we had a high and a lower mountain peak high. So where would have we got short on this one? That would either be on the close of this candle, on the open of this one, or up here on the higher closing. Better price to sell from, higher close. I sold right there, man, right on the close of this bullish candle, and I got short, and down, down, down we went. And I took profit right around here. So I made like 100 and something. Yeah, it was like 115 points I made on that trade today. It was a beautiful, beautiful non-farm payroll. I was about to say non-farm Nob Hill Farms. That's this grocery store that we had here 20, oh shit, over 20, like 25 years ago, 30 years ago. Non-farm payroll, Nob Hill Farms. You see how they kind of sound the same? They tricked me. Sorry about that. Anyway, had a really good trade today. Best trade I've had in a long time to take over 100 points. And then look what they're doing, eh? They're buying it right back up today. It wouldn't surprise me that we'll end up higher on the day today. But that's just a guesstimate, right? That's I think it's going to do this. Oh, I think it's going to do that. And it doesn't do it. That's why you always have to trade what you see with your two eyes than to assume and think where it's going. You know, oh, look, it's going up. It's in an uptrend. I think it's going to keep going up. And you buy right here and it goes back down. See what I'm saying? You got to trade what you see, not what you think. And you got to buy dips along the way or sell rallies on the way down. Okay, let's look at the Dow Jones now. Oh, look at the Dow Jones. Oh, look at that beautiful trade right there. Look at that. Hey, it didn't have the sell trade here. It didn't have that. But it had a hidden divergence trade from here. Okay, let's mark them up. I see them. I see the trades. This is the same thing as the NASDAQ. Okay. We went up. We pulled back. And there's the setup to go long. Just like that. And we'll take out the arrow. And the arrow to buy is right there. So you would have got long right here. Your stop would have been 103 points. Went up 168 points. That's pretty cool. Then we had another setup, ladies and gentlemen. We'll just draw it to that one, okay? Right there, from this low right here to here. Okay, I'm a little bit off here. Let's put them. Let's do them good right here, and this one goes right here. Okay, that all lines up now. And you would have got long right in there. I know it's far from down here. What can you do? But it gives you a bigger, if you have a bigger stop, then you have a bigger target. If you were to get in earlier, you would have less of a target. All right. The stop was 96 points. Did we hit it? Did we hit it? Oh, 91. We need to go 5 points higher to hit our 1-to-1 win-loss ratio target. Look at that. Oh, there's something else I wanted to make clear here. I've been saying it on here for quite a while. I guess because I got it from somewhere else. That's probably why. You see, all these, not all these things, but most of the stuff I show you on a chart, I've learned it from somebody else, okay? Either a mentor or just other traders. I've seen how they trade, whatever. And I try and take the best of the best that I learned from everybody and use it to my own, discretion, and hopefully it'll work for me. And it has. And I'm saying this because I want you guys to try and understand that no, you don't have to learn your own new trick or build your new wheel. Okay? You don't need to build a whole new wheel. It's already been invented. It's the same thing in trading. You don't need to have your own strategy to do what you want to do. You can, but very seldom traders find some little knick-knack or way to trade that they think is really good and it's different from everything else. But believe me, 98% of the people who try and create their own way, their own strategy, it probably doesn't work for the most of them. That's what I'm trying to say. So when I was saying, and I've said it many times, that the market chops 80% of the time and it trends 20% of the time, I think that's a wrong way to look at the market. And it proves it right here. So what I've come to the conclusion is it's like this. It how would I say it? It turns. What it does is it turns and goes the other way. It does that like 80% of the time, and 20% of the time it keeps going in the same direction. That's what it should be. See, look here how it went up, turned around, came down, turned around, came all the way up, turned around, came down, all the way up again. See, all these times it keeps changing direction. I would say it changes direction 80% of the time and continuously goes in the same direction 20% of the time. There's my new analysis of that. And yes, there are days and there are times when it chops up and down in a very small range. Okay? There. Now I think I have that right. And that is coming from my own brain, not from somebody else. Okay, let's move on now to the S and the P. Same trades as the NASDAQ. Same shit. Same shit. Right here. Low retracement. Lower low. Okay. That's what you're always looking for at the bottoms of the chart and the top of the chart. Either lower lows at the bottom or higher highs. See right here, higher highs at the top, or double tops or double bottoms. And in a trend, you're looking for a pullback to find divergence. Okay? So anyway, let's put these arrows on here. I hope I taught you guys something good today. Because more than anything, I want you guys to succeed. Because it's every trader's dream, okay, to trade for an hour or two in the morning and go on with your day, right? And and make enough money, you know, you can support yourself or your wife or your husband and kids. You know, I want that so much for everybody. You know, I think I grabbed the wrong arrow. Oh no, it's the right one. Okay, right here. But there's a lot of people, they start out like that, you know, me included. You know, back then, you know, I said all that I need to make is just $100 a day. That's what I would make at work at the time, right? I worked in a factory. No, I wasn't trading when I was a bricklayer. But anyway, just go back to what I was saying about the market turns direction all the time. Back when I was a bricklayer in the 90s, I was in my late 20s then. I worked with many different companies, whatever, because I never took no shit from nobody. If they fucking, you know, treated me badly or picked on me, whatever, I told them to fuck off and I quit. So I worked at a lot of different bricklaying companies. Believe me, I'm not one to stay at a job long. So I worked for about 50 different companies back then. And my point is, I learned a lot of stuff from a lot of different bricklayers, right? I learned all their little tricks and I applied that in my own bricklaying and it made me a better bricklayer. And it's the same thing with trading. If you learn a bunch of little tricks from all different traders and you're not too, you know, proud or whatever to not use them, you can really improve upon something. It's the same thing with any trade, whether you be an electrician, a plumber, a carpenter, doesn't matter. A trader, if you learn the tricks and you apply the tricks, you'll become better. Now I forget what I was first talking about. Anyway. Anyway, so you would have bought here, up it went 18 points, almost 19 points, and your stop was 17 points. You got the 1-to-1 there. And here the stop was 11 points and it went down 20 points. So you got your 1-to-1 on both trades. And now they're taking it back up, probably up into here again. So don't be proud, you know, that you can't learn something from somebody. Just don't be. Don't be stubborn and say, I'm doing it my way. This is my strategy and blah, blah, blah. You know, sometimes it takes learning something from somebody else. That'll make you better. Okay, let's look at oil. What did oil do? Oh, whoa, whoa, whoa. Yeah, here's the trade right here. We have a low, a retracement, and a lower low. See that? Low and lower low. That's what I said to look for at the bottom of the chart. Woo! Running out of breath. Here it is. Just like that. And that's why I use moving averages. You can see the clear entry point. It's right there. Okay? You need it to cross up on the other side to prove that, hey, yeah, some kind of momentum means it's going to go up. And it sure did go up. So your stop was 33 ticks. Guess what? You got your 1-to-1. You remember in the video that I just shot the other day how I said eight times, minimum 7-8 times out of 10, it's gonna hit your 1-to-1 risk reward. But if you go for 1.5 or 2 or 3, 80% of the time it's not gonna go there. You see what I'm saying? It's not. And that's why I say go for your 1-to-1, because it's a high probability trade setup that, you know, you're gonna succeed. You're gonna hit the first target. Now you can go in with 2 orders, okay? So your first order hits the target, then you move your second order from the stop loss to break even, and have a 1.5 or a 2 risk reward set up for the second order. You can do it like that, because the worst that's going to happen is your first order hits the target, you take profit, And your second order, it doesn't go to your, you know, extended risk reward target, and it comes back and it closes out for break even. But you still make money on that first order. That's it. That's a total other way that a lot of professional traders trade like that. Okay, we got double bottom again right here, but there's no divergence because this valley is, and we have one valley here too many. But anyway, if you're a support and resistance trader, you would buy right in here on down here as soon as it came here. And look at that nice trade back up, eh? If you would have bought right there, it's like 8 points. No, 80 points. This is the oil, crude oil. Let's go look at the daily. Where the hell are you going? Oh. Wow, right back up here, eh? Look at this shit. Look at how many times they sold off of here. That's a daily chart. Look at all those trades we done, eh? Yeah. La-dee-da. All right, so there's the trade. There's no other trades that I can see. Well, there is over here, I guess. Yeah. There's a trade right here to sell, and it came down. All right, let's move on now to gold. What did the Goldie do? Oh. Yeah, there's actually a trade down here if you really look. Well, is it from here? Oh, yeah. Right there. See that? That's divergence, ladies and gentlemen. So we got long in here. Big stop on this sucker. Woo! 100 ticks. And there's your 100 ticks. You would have got your 1-to-1. Do we have another one? Yes. Can you see the upside down teacup? Here's the handle. Here's the bottom of the teacup where you pour your tea. There's the teacup. All right, so we got a high, a retracement, and a higher high. Just like that. Just like that. And we had a arrow to sell it right there. And we'd still be in that trade. 36-point stop. 42. You see that, ladies and gentlemen? There's your 1-to-1. And 1-to-1 on the buy, too. Gotta like it. Ooh, my finger's hurting me today. Pound yen. So tired. Double top. Down we go. Could have entered short right there. Went down 50 points, and the stop would have been 22 pips, I mean. 50 pips potential with a 22 pip stop loss. EJ, Euro Yen, there's the trade. I see it right away, right here. Double top. Look at that perfect double top. Look at how straight that line is. And right here, boom, 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 boom. All right. And you would have got short right in there. Stop would have been, say, 20 pips. 26 pips. There's your trade right there. And you could make this a trade, but I don't know. It's not a good one. I'll just pass on trying to draw it. Let's now look at the last instrument of the day, which is the pound dollar. Oh, look at the pound dollar. Yeah. See this here? We got a low, a retracement, and a lower low. Oh, wait a minute. Yeah. That's good. That's divergent. Hard to see, kind of weird, but it's divergent. So if we would have got in this trade and you bought on the retracement, right there, your stop would be 21 pips. Went up 76 pips. Now what do we see up here? Oh, double top. Is it perfect? No. Close enough. And we would have sold right there, still in the trade, short from here. Stop would be 21 pips, and so far we've come down 12 pips. Need to come down here to hit our first target. Okay, ladies and gentlemen, that's it for today. I hope I passed on a few good tips to you guys and you ladies, and yeah. So I want to thank you so much for watching and listening, and I would really appreciate it if you could hit the like button, and if you didn't subscribe yet, please do, so you can come back on Monday and learn some more good stuff and see some more good winning trades, like 80% winning trades, if not higher, okay, setups. And that's what you need to, learn in your trading endeavors. You got to have a higher win rate than lose rate. You know what I mean? And don't believe all the time. Here you can believe it, that we have a very high win rate with this strategy, divergence. Okay, but there's a lot of stuff out there. They'll say they win 95.2% or some stupid shit, and it's just a lie. And let me explain to you why. One more tip before I go. Sorry to keep you here, but this is good. So, say you have 10. Say you're marking this down in your trade log. Okay. Let's say you're going to do 10 trades. Okay. Now, let's say on all 10 trades, we had a 100 pip stop and a 100 pip take profit. Okay. So, let's say you win 7 trades out of 10. Okay. Now, someone who's trying to fool you will say, oh, we have a 70.2% win rate. But if you think about it, do you really have that? No, you don't. Let me explain why. So we did 10 trades, right? We won 7 of the 10. So that's 700 pips that we won. Okay? But on the other 3 trades, we lost 100 on each one, so we lost 300. So we had 700 pips winning, but we had 300 pips in losses. So if you minus the 300 pips from the 700, what do you have? You have 400 pips that you made, not 700. Do you follow me? You see how they can trick you? Yeah. You gotta account for your losses. That's why you go and you trade things and you go, what? What's going on here? This doesn't make sense. I won on 8 trades, but it's only showing me a profit of 60%, not 80. You see what I mean? Yeah, you see what I mean. Do the math and you'll know. When you make a loss, believe me, to make it up and make a profit, you need to make twice as much percentage. You know? let me say another thing quickly. Say you have an account with $100 in it, and let's say you lose $80 of the 100, right? How much money do you need to make back to make up for that 80% loss? If you only have $20 in there, to make it back up, you need to make like 800%. You see what I'm saying? Yeah, it's very. All I can say, let me put this into a general theme. It sucks to lose, but oh boy, is it fun when you win. We'll see you on Monday, traders. Good luck, good trading, and have a great weekend.